Hi everybody. This week we're going to be focusing on discounts. And so some of these topics might be very new to you unless maybe you've worked in the purchasing, accounts payable, or accounts receivable areas of a business. So we've all heard the term discount, but it has different meanings in the world of commerce. And so this week we're going to focus on what that term means. And so this week specifically, we will be looking at trade discounts. We'll also be learning about this term called the single equivalent discount rate. So you'll hear me use the term SEDR a lot this week. That again just stands for single equivalent discount rate. We're also going to be looking at cash discounts for fully paid and partially paid invoices. So when we talk about the net price with discount method this week, what we're really doing is just finding out how much a buyer really pays after discounts are applied. And so to compute the net price using the discount method, here's what we're going to do. First, multiply the trade discount by the list price. This is going to give you the discount amount. And next, we're going to subtract that discount from the list price, and the result is going to be your net price. So really it's just two steps. First, figure out how much of a discount you're getting, and then subtract it from the original price to see what you'll actually pay. And so let's take a look at this example here. Here we have Northeast Restaurant Supply. Let's say that they sell a set of stainless steel trays to Gideon's Bagels. There's a list price of $120, and Gideon qualifies for a 25% trade discount. And so what we're going to do is to compute the net price using the discount method. So the first thing I want to do is to break down this word problem and just list what is given to us. So we do have a list price, and it tells us that the list price is $120. And there's also a trade discount of 25%. And so using the discount method, remember that the first thing that we need to do is to find the discount amount. And our discount amount formula, as we saw from the previous slide, is simply your trade discount multiplied by our list price. Now that we have our formula, we can plug in those values. So that's going to be 25% times $120. So when we plug this in, this gives us a discount amount of $30. So this is just the discount amount that we just calculated, but remember it is asking for the net price. And if you recall, the net price is simply the list price minus our discount amount. So our list price was given to us, that was $120, and the discount amount is $30. So this tells me that the net price is $90. So $90 is what Gideon's Bagels is going to pay Northeast Restaurant Supply for that set of stainless steel trays after their discount. And so the complement method makes finding the net price faster, and instead of subtracting the discount from 100 or the list price each time, we're going to use the complement of the discount right away. So the first thing that we're going to do is to subtract the discount rate from 100% to get the complement rate. We're then going to multiply that complement rate by the list price, which is going to give us the net price. So there's going to be two things that we have to calculate for this. First, the complement rate, and then using that complement rate, we'll then calculate the net price. Okay, and so we're going to use the same information from the previous example, this time just by using the complement method. And so the previous data had a list price of $120, and there was a trade discount of 25%. And so the first step, if you recall, is to find the complement rate. And the complement rate is always going to be 100% minus the trade discount amount of 25% in this case. So this gives me a complement amount of 75%. Now that I have my complement rate, I'm just going to multiply that by my list price. So my list price times my complement rate is my net price. So $120 times 75% gives me still $90 as the net price. This is just a different way of calculating it. So just be very careful if it asks for different questions what the complement rate is or what the discount amount is. Be sure that you're able to calculate that. A series of trade discounts means more than one discount is applied in order, one after the other. And instead of adding the discounts together, each discount is taken off the new reduced price. So let's take a look at the steps of calculating them. So here's how it works when we have a series of discounts. First, we're going to apply the first discount rate to the list price, and that's going to give you a new price. And then for each additional discount, you take the price you just calculated and apply the next discount rate. And then this is just going to create a chain of intermediate prices. But if the buyer doesn't need to sell all of those intermediate steps, there is a quicker way. We can simply multiply the list price by all of the complement rates one after another to go to the net price. And so we're actually going to look at a couple of ways to calculate these. So let's take a look at example C. Here we have Northeast Restaurant Supply. They're selling a set of mixing bowls with a list price of $200. And let's say that Gideon's Bagels, they qualify for a series of discounts in the amounts of 25%, 20%, and then 10%. What we're going to do is to compute the net price using the discount method. And so the first thing I want to do is to take my list price of $200, and then I'm going to calculate the first discount. And the first discount is going to be on the first percent here. So we're going to separate these into three separate discounts. So I'm going to take 25% off of our $200. This gives me a discount amount of $50. And to find the new net price, I'm going to take that $200 and subtract the discount amount. This gives me a new net price of $150. So we've taken care of this 25%. Next, I'm going to take 20% of my new net price. So I'm just starting on a line below. I'm going to multiply that by 20%. And 150 times 20% gives me $30. I'm going to find the new net price after this 20% discount. So that means I'm going to take this net price, and then I'm going to subtract that 20% discount amount, which was $30, and this gives me an adjusted net price of $120. So I've calculated the discounts for both 25 and 20%, and now I'm going to find the last, which is for this 10%. So I'm going to take $120 times 10%. This gives me $12. And I'm going to do the same thing. I'm going to take my adjusted net price of $120. I'm going to subtract the discount amount of $12. And this is going to give me the final net price amount of $108. And so remember that I mentioned that we can't just add up all of these discounts, the 25%, 20%, and 10%. Although it might be kind of close to this 108 net price, a 25, 20, 10 discount isn't necessarily the same. And so generally businesses offer series discounts just as a way to reward different things like bulk buying or seasonal promotions or preferred customer status. And so let's see what happens if you were to do it the incorrect way and added everything up. And as I mentioned, it might be a little bit close, but it's not the same as this $108 net price. So if you were to add that 25% plus 20% and 10%, that would have given us 55% in total. And if we multiplied 200 times 55%, again, it's close to that $108, but this is a series of discounts. It's not a bulk discount amount. So make sure that you do calculate this using the correct series, first with a 25% discount, then 20%, and then 10%. So that was just one way to calculate this. We can also use the complement method. And so we're going to use the same example here, or the same data rather. And so remember that was a $200 list price, and we had series discounts of 25%, 20%, and 10%. So by using the complement method, we're going to find the complements of each of these. And so remember that the complement is simply 100% minus the trade discount. So 100% minus 25%. This gives me 75%. The complement of 20% is 80%. And finally, the complement of 10% is 90%. Now that I have the complements, I'm going to go through those steps again on calculating the first discount. So I'm going to take our original list price, and I'm just going to multiply that by my first complement of my discount. So 200 times 75% gives me $150. Next, I'll take that new net price of $150 and multiply that by the second complement. So $150 times 80% gives me $120. And finally, I'm going to take that adjusted net price of $120 multiplied by 90%, and that's going to give me $108 as my final net price. And so both of the examples, both in example C and D, were a little bit long to do, but there is actually a quicker way to do this. especially on your calculator.